Welcome to the One Rental to Freedom podcast, creative investing strategies for building wealth and financial freedom through rentals. I'm your host, Chad Harris. Welcome, everybody. Good to see you back. One Rental to Freedom podcast, where we focus on building a rental portfolio using other people's money so that you can build wealth and change your financial future. If that's what you're interested in, you are in the right place. And our discussion today is going to be really beneficial, especially if you are in a market where it's tough to find deals that cash flow and you've kind of been toying with the idea, how do I invest in a market that I don't live in or isn't truly local? Or maybe you're getting a bunch of leads and you don't want to keep all of them because there are some dogs out there. There are some properties that don't fit a good buy and hold, right? They'd be better for somebody else or better for a flip. And what do you do with those leads? If you've ever wrestled with either of those two questions, make sure you stick around for this interview with my good friend Chris Logan because he's going to answer both of those. All right. So, welcome, Chris. Good to see you again.
Awesome, Chad. Great to see you again as usual. And I appreciate you having me on the podcast. Looking forward to dropping some bombs here today and, educating your audience here on virtual wholesaling.
Yeah. Yeah, so glad we run in the same circles and see you often, and we don't have the same business, but I
Hmm.
think there's a ton of overlap in beneficial complementary skills, right?
Yeah.
And so really glad to have you on today and get into the details of it. So for everybody else, share just a little bit short version of, who you are, what you've done in real estate, what you've built.
Yeah, for sure. So, I started out like most people did in real estate. There's a million different ways to get started, but just not knowing which one to pick and was the right one for me. I also used to think you used to have tons of money to be able to get started in real estate or a rich uncle or connections, but I couldn't have been more wrong. So one Sunday, I reached out to a friend of mine who I knew was successful, didn't know he was in real estate, and I asked him, "Hey, how do I get in real estate?" He recommended one book, and that was Rich Dad Poor Dad. So I read that book. It changed my life in one night. I stayed up till 3 in the morning reading the book and couldn't put it down. That started a catalyst to go to a 3 day real estate event where they showed all the different ways you could get started in real estate on the board. And the one that connected with me most was wholesaling. When they said you could take a piece of paper, you could flip it for tens of thousands of dollars, and you didn't need any credit or money. That right there was where I was at. I was bouncing back from my own setback. And we enrolled in a 2 or 3 day boot camp to get started in wholesaling. My wife and I, she was my girlfriend at the time, we're doing this business together. And that was it. So I attended that training. Fast forward several years later, we were wholesaling houses virtually up until, or wholesaling houses locally up until about COVID happened, like 2 years before the pandemic. And that's when we switched to doing it virtually. Now, for those of you listening who don't know what wholesaling is, it's very simple. All we do, it's a sales and marketing business. We just find motivated sellers and match them with motivated buyers and keep the money in the middle. So if we have a seller that's looking to sell their property for 150, we agree to that because we know we have a buyer that wants to buy for 170, and in 2 to 4 weeks on the day of closing, we walk away with that money, right?
That,
So yeah, so we switched from local to virtual 2 years before COVID, which was a godsend. COVID ended up being our one of our best years ever in business because we were one of the only ones that were doing this business virtually over the phone. We didn't need to see sellers in person or anything like that. And so we were ahead of the curve there. And what we ended up doing was switching over to 100% virtual, meaning again, we're not driving to sellers' houses, not meeting them in person, not meeting buyers, anything like that. And we're doing this business 100% from home. Since then, we've grew our business to over 7 figures and done over 600 deals. And now we're really passionate about showing others how to do the same.
man, that's awesome. Yeah, I'm looking forward to diving in. I like the first two topics, but I also like, how do you evaluate properties virtually and make offers
Sure.
virtually? And because even though I like to keep the properties, I still want to do business from Florida, from my farm, from out
Yeah.
west, right? So yeah, I love it. We've got a lot to dive into. And for anybody, I love that so many people's stories, they're like, I read Rich Dad Poor Dad, and that totally changed everything, right? It is amazing how many people that was the catalyst. And
Yeah.
that's the reason my kids all have read Rich Dad Poor Dad. We used to listen to it on family vacations when we were driving, the audio version. And for anybody who hasn't read that amazing book, definitely read it. And the key to that book is it's not really anything about how to do real estate, it's the perspective shift of why buying assets is so important or investing is so important versus W-2 and trading time for money. Would you agree?
Totally.
It's that, yeah,
Yeah. And with that, the thing that I connected with the most in that book, and I'm sure many can relate here listening, is that it was simple. Up until that
yeah,
point, I tried to read real estate investing books and they were so complicated. I had no idea where to start. And they were talking to me up here when I was like down here, right? But that book, what it did is it came down to my level, broke it down very simply, showed me the first step to getting started, and really had to switch my mindset to a wealthy mindset. And that right there is really the foundation of why I'm so passionate about keeping things simple and showing others how to get started in this, even if they have a full-time job, zero experience. Taking, what their current goal is, whether that's growing their portfolio, and they're looking to do it much faster by being able to turn on a marketing machine that consistently brings them deals, or if they're just looking to evaluate deals in other states to grow beyond their existing territory. Not all territories are good for investing, and this really just kind of opens up your mind to what's possible and allows you to grow faster.
yeah, I love it. And there's, a lot of people right now, if they live in a market where prices have gone, exponential and rents
Yep.
haven't kept pace, it's hard to get a cash flowing deal. Like when
Yeah.
I spoke in Nashville, their single family house is $450,000 and it'll rent for 2,000 a month. Well, it's just hard to cash flow that. You're going to have to get super creative
Yeah.
or you have to figure out how to invest in another area.
Yeah.
And another example is some states are just going really tenant friendly.
Mm,
Colorado, and the profitability, even though the assets are valuable and rents have climbed, just the profitability is falling apart
yeah.
because of, the political perspective. So I love the idea of if you're in one of those areas, how do you find deals? Like, how do you pick the area to target? What's the actual process like
Yeah.
to begin to evaluate deals and make offers in another market?
Yeah. So this is a great starting point for this conversation because picking a winning territory is the very first step and getting on the path to landing deals in the areas that you want, making sure you're getting high profitable deals in the areas that you're looking for. So the first step that we look at, and this is something that everybody can do. You don't need any fancy tools to do this. All you're going to do is you want to go to Google and you want to type in the nationwide median home price. Okay. What the median home price is, for those listening who don't know, it's simply the most common type of house that's being bought and sold and the one that everybody wants and the one that everybody can afford for the most part. Right. So if you look on Google and you click a Zillow link, it's going to tell you what the nationwide median home price is. What you want to do, the very first step to finding a winning territory is picking a territory, specifically a county in a state that you're looking in, that has a median home price that is below the nationwide median. Because the first step for a real estate investor to be able to find good deals is you have to be able to target affordable housing. Okay. Affordable housing. And what we typically find is the areas that have median home prices below the nationwide median, that is affordable housing. So, what I like to do as a virtual wholesaler, first thing I like to do is I like to take a look at that, right? I like to look at the state and then find a county in there that I want to start with. And that right there, that median home price of that county is my kicking off point. As a side note, if you're just wholesaling, you want to make sure to look at if the state requires a real estate license or not. That's a really big thing because some states do require a real estate license. I know most of your listeners here are growing their portfolios aggressively and they're looking to evaluate deals nationwide, but that's just an important thing to consider, especially if you're going to be doing something with the leads that you don't want to buy, right? So you want to know the rules of your state. So the second step, once you have identified the median home price or a county to start in there, the second thing you want to look at is you want to make sure that the territory has older housing. Okay. So we're talking housing that is at least 20 to 25 years old or more. Reason being is these properties are going to have distress. They've been sitting around long enough to have some type of distress. And as a real estate investor, we make money when we can add value, right? And we can't add value to properties that are built in 2015, 2020. It's really tough to be able to do that because the seller hasn't owned the house long enough to be able to have enough equity where they could accept a lower offer. So this is the second piece. So the first piece was the median home price. The second piece was affordable housing. And then the third piece, and this is probably one of the most important parts of everything, is recent cash sales. There must be recent cash sales in the last 90 days from cash buyers like yourself who are also buying in the territory. This is proof of concept that says, hey, this is a good area for me to buy in. And you know what? If I don't want this lead and I want to offload it to somebody else, maybe it fits somebody else's buy box, then I'm going to be able to do that. And there's going to be demand there in order to be able to sell that pretty quickly.
That's sharp. Yeah, yeah, there's a bunch of good takeaways there. Coming from Ohio, it's like, look, make sure there's older housing. I'm like, that's all we've got in Ohio, right?
Yeah.
This is the Rust Belt. It's all older housing. But
Yeah.
yeah, I really like that in assessing another area to invest in and making sure there are other buyers.
Yeah.
I mean, if you're worried about what the political spectrum is, or whether it's tenant friendly or landlord friendly, or what it is. I mean, that's a really good way to figure it out. Are there distressed properties? You'll see it in the sales, right? If
Yeah.
there are low price sales that are distressed properties. So
Totally.
that's
Yep. Would you
sharp.
mind if I took that a step further? Because there's one more thing that I think could be massively helpful to your audience here.
Of course. Let's go, man.
Awesome. So the next thing that you want to do, so we talked about recent cash sales, right? So in wholesaling, a lot of people, a lot of gurus out there tell you to do it the wrong way. They're like, "Oh, go find a good deal and the deal will sell itself if you're not looking to, do anything with the property," right? That advice is total baloney and keeps people stuck. What we do, what we recommend is to find buyers first. So this goes hand in hand with what we just said, recent cash sales in the area. You want to identify what buyers are buying in that area. Is it single family houses, townhouses, condos? You want to see, the price points that they're buying in. You want to see the square footage of the properties they're buying, how many bedrooms and bathrooms, right? So this way you can put together a box of what is good to buy for yourself, or if you need to offload it, what can sell really fast. So once you have that information, then you can use that to go target the right types of properties. So when you do get something under contract, you can have confidence one of two things is going to happen. You're going to buy it or you're going to be able to sell it. Either way, it's a win-win when you lead with finding your buyers first.
I like that. Yeah, in my sphere, we talk a lot about you should raise the private money on the front end.
Yes.
And then you can make offers really confidently, knowing as soon as you get that deal under contract, you're closing, right?
Yeah.
And I like if you pair that with also finding buyers in that area that are buying similar properties, man, yeah, then you can make the offer, you can close the house, or if for some reason you don't want it after you get into it, right? Even if it's virtually
Yeah.
into that deal, you can pass it off to somebody else, or if you find too many deals and you can't close on all of them, whatever the situation is. I like that. That just brings more comfort or more confidence to that dealing with a lot of sellers. So,
Yeah.
sure.
Absolutely. And that's a really good problem to have, to be finding too many deals and not enough buyers. I mean,
That's right. That is a good problem
oh
to
no,
have.
I have to
Yeah,
cherry
many
pick the best
people
ones
would
for
love to
myself.
be in that in that situation. Yeah, sure. So with wholesaling, okay, let's say in my sphere, if I'm going to keep the property, then I already am looking at that neighborhood or county or zip code, whatever it is, and looking at the property taxes and what the cash flow is going to be like compared to rents. With with wholesaling, do you worry about any of that? Or if you're end buyer, you automatically know your end buyer is a flipper? Do you try to know their numbers, or is it just 65% of ARV? How
Yeah.
detailed do you get?
Great question. So, as a wholesaler, a big thing that's really hard for people to overcome is casting their own opinion on deals or saying this would work this way or would not work
Mm,
this way, right? So, the best way to avoid that, piggybacking on finding your buyer first, is we grow our buyers list around what people are looking for and what has the most demand. So, if we have buyers that are not looking for flips, they're only looking for rentals, then that's all we're looking for. And then we're getting the formula from them and we're putting every opportunity we come through that lens. On the flip side, if we only have flippers in the area, then we're doing the exact same thing. We're looking at everything through the lens of how they evaluate deals. Now, most wholesale formulas out there are totally broken, right? They are old, they're outdated, they don't work. And so, what I've come up with is what's called my easy offer method. A lot of people struggle to evaluate repairs and really just pricing the property for someone else to want to buy it. Is it going to be a good deal? Is it not? And so I've come up with a very simple system that allows you to identify good deals really quickly, move on them really quickly, and be able to have confidence behind that you got a good deal, right? So cool if I share that?
of course. I mean,
Awesome.
in all honesty, that's why wholesalers get kind of a bad rep,
Yeah.
is because over and over you see bad wholesalers presenting bad deals with bad
Yeah.
numbers,
Yep.
and the really good wholesalers who know how to run numbers and make offers, man, you're right. They
Yeah.
have no problems getting rid of their deals. So,
Yeah.
yeah, let's
For
hear it.
sure. Awesome. So the best way that we have found to be able to make offers on properties and evaluate how much you're going to sell them for is using a simple system called our easy offer method. Now, the foundation of this is being able to find accurately the after repaired value. Okay, so I won't spend too much time on that because I'm sure you teach that to your audience a lot and people
Yeah.
are pretty familiar with that. But you want to be able to find the after repaired value. In short, it's just finding three properties that have been fully renovated close to your property within about, half a mile of your property if you're in like a major metro area or maximum of a mile if you're in like more of a rural territory. And what you want to do is take the average of those three fully remodeled properties. And again, they have to be within 10 years of the build date of your property. So if your property is built in 1950, you only want to look at properties between 1940 and 1960 and within 20% bigger or smaller than the square footage, right? So that's finding the after repaired value, simple stuff. The next layer of that is where our easy offer method comes in. So I've looked at all the formulas that have been out there. I've been doing this for a little over 13 years, right? And I have ran them all against my strategy, and my strategy comes out to be the exact same thing or even a little better, right? So what I've typically found to simplify this is if you can get a deal under contract for 50 to 55% of the after repaired value, it doesn't really matter the type of repairs the property needs. That's going to be a deal. And if you can sell that property for 60 to 65% of the after repaired value, then again, you're going to be getting it to a buyer at a number that's going to make sense. Now, here's where it changes a little bit. This isn't across every state. The major states that I've seen this method works really well for, these specific flat percentages, is the Midwest and the Sun Belt states, right? If you go beyond that, you go to higher competitive territories like California, Washington, New York, those types of territories, you got to adjust those percentages. And that's exactly what I help my clients with in identifying the different percentages across the country because every state is different. But once you have this system down, you can evaluate a lead in 15 minutes or less to see if it's going to be good by finding the ARV. And then from there, you can go ahead and put together an offer in about 10 minutes to be able to get your offer to a seller and get the deal under contract. Time kills all deals, and the easier and the more simple you can make this, the more deals you're going to do, and the better deals you're going to get.
Okay, so with this system, you're not
Mhm.
even looking at rehab estimate. You're not looking at property condition really, right?
So
It's
there's only four things that we look at when it comes to property condition. There's
okay.
four big ticket items: the roof, the plumbing, electrical, and the AC, right? In some states that have septic, you want to look at septic too. So we do adjust the percentage, the sale percentage, a little bit. If more than one of those items needs to be remodeled, we simply just take off like about 5%, the more of those items that need to be removed. And that way it adjusts your price. So that way you are accounting for those things, but we don't account for them like most people do, because here's why. Most people, they sit there and they're like, this kitchen's going to be $35,000 to renovate the kitchen. Well, guess what? What if your buyer can get it done for $15,000? What if he's not replacing all the cabinets? What if he's just, resurfacing the countertops and refacing the cabinets and putting some new hardware on there, right? Good
Yeah.
for him, bad for you,
Yeah.
right? So he's going to say, of course, that needs $35,000 for that kitchen. And you're going to take home less money. So as a wholesaler, we're not contractors and our buyers know it, right? And so if you haven't bought at least five properties or remodeled at least five properties, you have no business estimating repairs, because it's just going to make you look bad. You're going to lose credibility, like you were talking about before. A lot of wholesalers lose credibility,
Hmm.
and your margins are going to suffer because of it. Buyers are professional salespeople, and you want to give them as little ammo as possible.
That's sharp. Yeah, it's interesting because it is that's very different from what you hear in every other formula out there.
Yeah.
And the truth is, even among buy and hold buyers, right? That estimate is going to vary drastically between the guy who has scaled a portfolio and everything is run through professional contracting crews versus the guy who's starting out and he's still doing all the labor himself and not paying
Yes.
himself for it, right? Those two estimates are vastly different, and there's no way
Yep.
for you to know that um, as the wholesaler or on the front
Yeah.
end.
And
Yeah.
even when it comes to rentals too, like when you're looking at selling a rental property to somebody else, you want to make sure that you don't put it through your formula and you are saying, well, I know this is a good deal, because they're going to say, well, if it's such a good deal, why don't you buy it? So what you want to do, if you are looking at a deal for somebody else, look at it through their eyes, get their formulas, use your formula for when you want to buy it yourself, but when you're selling that deal, don't try to convince people that the method you have is great and it's a good deal, because they're just going to tell you if it's such a good deal, why don't you buy it?
Sure. It's interesting because, yeah, so, okay, so the two ways to kind of figure it, let's say
Hmm.
someone in our audience, they're looking for a 3-2 brick ranch. That's their target buy and hold they want to keep forever. And
Yep.
they get some 1920s two-story wood-sided house that doesn't fit their buy box. And they're looking to, make some money off the lead, right?
Yep.
Then they shouldn't give a rehab estimate and try to sell people on why this would be
Yeah.
such a great buy and hold. You're
Yes.
saying they should just offer a low price, 65% of the ARV, something in that realm, or talk to the end buyer and get their formula first and then run the numbers backwards so that they present it as a good deal to that buyer. Is that right?
Yes, exactly. Wholesalers lose so much credibility. And I see this happen in Facebook groups all the time. You'll see a wholesaler, he'll post a deal and he'll be like,
Oh man.
flooring,
Yeah.
15K, full remodel of kitchen, 5K, foundation repair, 2K, and it makes them like, you're laughing as I tell you this, and this is what most people do online,
Oh,
like you,
for sure.
seasoned
You see them
investors,
get
and I'm sure
attacked
like your audience.
immediately. Yeah.
They're looking at what's this guy doing over here. So as a wholesaler, you don't want to do that. All you want to do, here's what our when you're selling properties that are not going to be a good fit for yourself, here's our only obligation to our buyers, right? It's to give them enough pictures so they can make an informed decision. Be honest with them about what the seller has told you about repairs or anything significant going on the property. Do not hide anything, right? You want to build a relationship of transparency because you're going to stand out from everybody else. And then lastly, offer a very clear asking price. That's it, right? And if you can do those three things, you can sell any lead that you have that doesn't fit your criteria to someone else because you've already found your buyer first. You already know what buyers are looking for. You're already looking at deals in the right territories, and you can have confidence that you're going to make some good money on the leads that you can't do anything with.
Sure. So I know a couple things people struggle with are on the front end, if when you're making the offer initially, what do you need in that contract to be able to wholesale the property or not have to close on it and pass the contract to somebody else?
Sure. So there's two very important clauses, actually three very important clauses that you have to have in your assignment contract. So the first one is you got to have an inspection clause, which is pretty common. Like every contract for the most part has an inspection clause, right? You want to get as long of an inspection period as you possibly can on there. We go for anywhere from 14 to 30 days, right? Sellers don't care. We're doing direct to seller marketing, and as long as we move forward with the property, that's all they care about, right? So get as long of an inspection period as you can. Because roughly it takes anywhere from 1 to 2 weeks to get a deal sold when you're first getting started and you really don't have that network of buyers just yet, right?
Hmm.
So the second clause you want to have in there is an assignability clause. So you want to have something in there that says you have the right to assign this property to another entity. Yeah, to be able to assign this property to another entity. And the third clause, which is very important, this clause here is something that a lot of states are really requiring right now. You have to disclose that you're buying the property with the intent to make a profit. Seller understands, buyer is purchasing the property with the intent to make a profit. So
Okay.
this way, when you walk away with a fat assignment fee of like $20,000, the seller's not like, whoa, what happened here? Well, Mr. Seller, I did let you know that we were purchasing the property with the intent to make a profit. So that's really important. And if you want to add another layer of security there, next to your name when you sign the contract, put and slash or assigns, which allows you to assign the contract prior to closing to whoever you'd like.
Okay. Sure. Sounds good. And when you are talking to the seller, how much do you have to talk about that? Right. In your instance, you're generally the only reason you're locking that deal up under contract is to assign it. If somebody's looking to keep that property, but they just want the freedom to assign it,
Yeah.
right? How much would you really focus on that in the conversation with the seller?
This is where most people get this wrong. Most people try to give too much information away or too little, and they shoot themselves in the foot, right? The biggest thing that I tell people getting started is that most sellers know nothing about real estate. Okay. If you've taken a course on real estate, you know 98% more than the people you're going to be talking to. Okay.
Yeah.
So trying to explain to them that if you're not going to buy it, you may wholesale it off to somebody else, they're going to really scratch their head because you have to typically attend like a 3 day event to learn how to do something like this, right?
Yeah.
So they're
Yeah.
going to be like, wait. So you're going to be, so you're buying it, but you're not going to buy it. And then if you do sell it like a realtor, you can get yourself in the really hot water there. So very simple. What we go by is what's on the contract. There's only two fields you can sign on the contract, the seller and the buyer, right? And so we are working with the seller and we are the buyer. That's it. What we decide to do with the property is totally up to us. It is irrelevant. We don't really have to share it unless that state has a disclosure requirement there. And there's ways you can disclose it without overwhelming people, right? But the biggest thing is not complicating things, just saying, you're the buyer and having those disclosures in your agreement for what could happen in the deal. Like you have the right to assign the property, you're purchasing the property, intend to make a profit, and at any time prior to closing, you can market the property. Different states have different requirements, so it's really important to know the laws of your state to make sure you're covering the right disclosures and you're saying things. There are certain states that do require you to disclose to the seller when you have assigned the property before you actually sign with the buyer too. So again, just being aware of the rules of your state is really important.
I like that. I like, it's similar with when you're making a seller financed offer. You don't need to use the real estate jargon of what
Yep,
documents you're using and what the structure is, right? In the end, what the seller cares about is when am I going to get my money?
that's it.
And what's the impact on my life? How good is life going to be on the other side of this sale? So
Yeah,
I love that. Keep it
yeah,
simple. Focus on how this sale benefits them, no matter what name is on that final sale contract. Perfect. I
yep.
like
You
it.
don't need to tell them you're going to send them a 1034 followed by a real estate form 592. You're just gonna confuse the pants off them. So
Right. And I would argue you probably have better odds of confusing them than actually informing them.
yeah,
So, yeah.
totally.
I like it. So for somebody, who says, "Yeah, man, Chris, I love this idea. This is perfect for my scenario." What's a good way for them to find out more about the process and what you do?
Yeah. So if you're listening to this right now and you're like, man, I would love to profit from the opportunities that I'm not working in, or I'd like to grow my portfolio much faster, or even target states that could be better than the state I'm in, right? Then the next step is to go to virtualwholesalingmadesimple.com. Again, virtualwholesalingmadesimple.com and click the link to apply. And what I do is every single person that completes an application on that website, I review personally to see if they're going to be a good fit. So you want to make sure you're really detailed in your responses because I can't accept everybody. But if after reviewing the responses, it seems like you could be a good fit for what we got going on, then the next step is I'll hop on a conversation with you, share with you, learn a little bit more about your goals, share with you what we got going on, and then see if you're a fit. If so, I'll invite you into the program. And if not, I'll point you to some resources that could help you on the journey. But either way, I like to create it for a win for people I connect with from your podcast and just other groups as well.
Cool. I appreciate it. Appreciate all the content you shared today, Chris, definitely. And I mean, very clear action steps on how to simplify the offer process and how to really convert more leads that you may not keep. Perfect. So, for anybody who's interested in finding out more and doing more wholesale deals, definitely reach out to Chris. We'll put the link in the show notes and description, and you can use that link to get in touch with him. So, thank you again, Chris. Always enjoy it. Appreciate everything.
Awesome, Chad. Thanks for having me. Had a blast.
Yeah. For everybody else, we'll see you next week. Until then, keep building your dream life one door at a time. I get it. I talk to people every day who recognize the massive value to buying rental properties, and they know over time it will drastically change their life, drastically change their financial future, change everything for kids, family, others, people they care about. Okay. But they're held back by one reason or another. Like they don't know the exact steps to focus on, or they've been trying to buy rentals and just getting frustrated by their lack of results, or they don't have enough money, believe they don't have enough money to buy rental properties. And I understand all of those things. That's why I created the One Rental to Freedom program, because it's a group coaching program where we work through all of those things together. It is only uh, highly driven individuals who want to change their life through rental properties and people who are go-givers that want to help each other out so that we all succeed, right? We're going to have a rising tide where all of us get lifted up to success. And so that group, we are always looking for new individuals that match that criteria. If you would like to see if you qualify, you can go to truewealthinvestors.com/contact, fill out the short application and schedule a call with me to see if you qualify. Really, the benefits of the program are that you get clear instruction, clear skills to know how to find good deals, how to run numbers, how to make offers, how to fund the deals with other people's money, and how to manage the properties so that you don't have headaches from tenants. We have weekly support calls to get questions to your answers, as well as accountability to make sure you keep moving forward. And we have a bunch of people in the group that are like-minded and want to help each other out. So you benefit from other people's experience. If that interests you, if you are truly ready to start moving forward in your real estate business, buy rentals, change your financial future, go to truewealthinvestors.com and you can apply there today. I look forward to talking to you soon. We are adding new episodes every week, so make sure to follow and subscribe. If you are a real estate investor or want to get started investing and you want to grow or scale with our help, go to truewealthinvestors.com. That's truewealthinvestors.com and schedule a short discovery call. I'll look at where your business is and offer a proven plan to get you and your business to the next level. We'll see you on the next episode.